Not really. I agree with Erdogan in some ways because, the central bank raising rates is not the solution. The solution is confidence, gaining confidence of investors, not only foreign investors, but domestic investors. And that means you've got to start policies of balancing the budgets and doing things that give confidence to investors. Raising interest rates alone is not going to do the trick. And we've seen that around the world, by the way. Argentina is a good example where, you can raise rates, but if people are not confident in what the government is doing, then you're not going to have it.
But surely the confidence is just a reflection of what the government is implementing in the first place. One of the reasons investors didn't have confidence is because they saw the way the president was reacting to this crisis, and he didn't react quickly enough, or at least in a way that markets would have liked him to have reacted. Similar case with President Macri in Argentina. People are saying he dragged his feet a little bit too long in terms of implementing reforms. So when you think about your portfolio, are you also thinking about working with countries and with governments who can be relied on to do the right thing in times of economic distress?
Yeah, our experience is that they will not make changes until their back's against the wall. And at that time, they'll call on the IMF, and the IMF will come in and say, look, you've got to balance your budget, you've got to stop spending, you've got to raise rates on, you're subsidizing electric power, you've got to change that, and then you begin to get change. And that's where, that's the best time to be coming into these markets, because the reforms are now beginning to kick in. But you got to wait until that happens.
Mark, when you started talking about launching this enterprise earlier this year, one of the things that was mentioned in the press releases was there would be environmental and social aspects to your investment decisions. Yes. I have to ask you, when you look at countries like Turkey or somewhere like Myanmar, is there ever a moment where you're going to say, we are not investing in this country because of the domestic politics, because they're jailing journalists? Will that ever factor into your decision?
Oh, definitely. If you look at Venezuela, I mean, when Chavez came in, we were out. Because he clearly stated we're going to take over companies.
Is Turkey a country that you would consider not investing in because of the leadership?
Exactly, exactly. That would be a, by the way, it's a very unusual case where you have that situation where you don't want to be in the country at all in any direction. Usually it's more nuanced. The government may be a little unfriendly, but then the companies are able to survive in that environment, and usually their prices are very, very low.
So can I just push you specifically? Will you not invest in Turkey right now?
We will invest in Turkey,
okay.
Yes, we will. Of course, we do find bargains in Turkey, but it has to be in a company that's going to survive the current situation. That's very, very important. It's not going to be a big part of the portfolio, but what we found is very often these companies that are in an environment that's in trouble can often have outsized returns and really boost the returns of the total portfolio.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.